Gold is testing a make or break area inside a clean rising channel. One decisive close will tell us whether we race to new highs or drop toward the 3800s. In this video, I'll show the exact levels I'm watching, the trade plan for each scenario, and the fundamental news that will decide this move. Let's get into it. Hey traders, welcome back. Today, we're doing a weekly gold forecast using the 4-hour structure and the latest macro signals. I'll walk you through the channel structure, the key breakout and breakdown levels, my trade plan for both scenarios, and the fundamental drivers that will likely push price next week. Right now, price is trading near 42.18 on the 4-hour chart and moving inside a rising parallel channel. You see it on screen. The last two touches show how price respected the lower channel support and rejected the upper channel. That behavior gives us a clear roadmap. A close above the channel equals bullish continuation. A close below the channel equals bearish retrace or swing down. Rising parallel channel, the sloped support and resistance define the current uptrend. Multiple touches at both edges give this channel strength. Recent action, price bounced from the lower trend line and is now approaching the upper edge. Historically, within this channel, price often pulls back after hitting the upper line, so we must wait for confirmation. PDH DPL area, price is also trading around the previous day high and low range, which is currently acting as a short-term battleground. A breakout outside this PDH-PDL plus a close beyond the channel line gives higher probability for a directional move. Key zones to mark. Upside trigger zone, close above the channel plus above 4280-4300 area, red supply block. Invalidates the short-term retrace. Downside trigger zone, decisive close below the lower channel and the 4100-4050 pocket, green demand, opens room to 3950-3800. How I trade it? I'm watching for a retrace back toward the channel mid-lower band first. If we get a clean pullback into support with bullish price action, I'll close shorts and enter along, aiming for the channel top and higher. If price breaks below the lower trend line with a body close, I'll look for shorts toward 3950 and 3800. Scenario A, bullish, breakout and continuation. Trigger, strong daily 4-hour close above the channel and above 4280, 4300 with momentum. Entry, after breakout candle confirms, preferably retest of broken resistance as support. Targets, first target around previous ATH zone, then open run toward all-time highs. Stop below the breakout candle low or a few handles under the channel line. Scenario B, short-term retrace, then long. My preferred intraday flow. Trigger, price retraces down to the channel mid-lower region around 4100-4050 and shows bullish rejection, pin, wick, engulfing. Plan, use that rejection to enter long with tight risk. Targets, channel top, and then the 4280 area. This is the buy the dip plan if channel holds. Scenario C, bearish breakdown, alternate. Trigger, decisive close below the lower trend line plus break of PDL or 4100. Entry, short on confirmation after breakdown. Targets, 3950, 3800, demand zone. Stop above the breakdown candle high or back inside the channel. Why this bias? Momentum. Although we're in an up-sloping channel, momentum often fades near the channel top. That's why I'm ready to short at current levels if price shows rejection, then flip to long on the retrace. This is a common smart money flow. Create a short squeeze or liquidations near resistance, then buy the pullback into real demand. Fundamental context. What's supporting price this week? Now, fundamentals. The macro picture is mixed but supportive for volatility in gold. Markets are actively pricing Fed rate cut expectations, which has been a tailwind for gold recently. Traders bumped up rate cut odds after recent Fed commentary. That lifted gold in the last sessions. Reuters. The US dollar has softened at times as rate cut bets increased, helping gold rally, but dollar moves remain data-driven and can reverse quickly. Big institutional views are bullish on longer horizon. Major banks, example Deutsche Bank, raised 2026 gold forecasts showing structural demand from central banks and ETFs that can support higher prices over time. Overall, headlines this week show renewed bullish interest, but price will still react quickly to any surprise U.S. data or Fed language, so watch the economic calendar. Use these fundamentals to justify a bias, but stay flexible. Technical confirmation still rules entries. Risk management and final checklist. Never trade a breakout without a clear close and confirmation. Use defined stop loss and size positions so a single trade doesn't blow up the account. Watch the economic calendar. CPI, jobs, or Fed speakers can flip the script in a single session. If price remains stuck inside the channel and PDH-PDL range, best to sit out or scalp until we get a clear directional close. To sum up, gold is inside a valid rising channel. Break and close above the channel equals long toward ATH, while failure and close below equals large retrace toward 3950, 3800. My plan? Be ready to short rejections near the top, then look to buy the next clean retrace into channel support. Fundamentals are giving gold fuel, but price action decides entries. If this helped, smash that like button, subscribe, and join our Telegram for live trade alerts and chart updates, link in the description. Drop a comment, are you long, short, or waiting for the breakout? I'll pin the best replies. Trade safe, see you in the next update.